Did you know that investors are already anticipating the next split in Tesla stock, even after the current 3-for-1 split? Granted, the stock split made it possible for more regular investors to own Tesla shares, and as a result, they are looking forward to the next split. You wouldn't want to miss this if you're interested in learning more about it. Lindsay Bell Allies claims that common investors can more readily purchase a stake in a company when stocks are trading in a comfortable range. Chief Financial and Market Strategist, which increases interest in the shares and consequently the number of traders before we close. Moo created a new feature. An invaluable resource if you're looking to identify stocks that could move in the next few days or months is the industrial chain. It offers a thorough overview of the hottest sectors like semiconductors and EVs. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, you may forecast price changes more quickly without having to read numerous research studies to understand the relationships within a single business, because segments are linked to industry histories. In the description, a link after the firm announced the split in early August. Tesla's 3-for-1 stock split went into effect in late August. Before the split, shares closed at $891, and the morning of the split, they started trading at about $297 a share. For each share held after the conclusion of trade, Tesla paid a stock dividend equal to 2 shares in order to implement the split. The stock split lowers the price of the shares and increases their availability to a larger group of individual investors. It also lowers the cost of trading stock options. In its initial proposal, Tesla stated that enhancing employee satisfaction would help to maximize stockholder value, and that the move was primarily meant to enable the firm provide every employee the option of acquiring equity in Tesla. When Tesla split its stock for the first time in August 2020, the stock rose 81% between the announcement of the split and the day it actually happened in a month that followed. In less than 2 months, Tesla shares recovered from a roughly 14% decline, rising over 36% 6 months following the split. As investors have learned that Tesla is not immune from a slowdown in spending, especially discretionary expenditure, the company's shares have increased by 28 since it announced its most recent split, but they are still down 16 for the year, according to Caleb Silver, editor-in-chief of Investopedia. A stock split is essentially just multiplication and division. It doesn't necessarily alter the business fundamentals of the organization. In its most recent split, Tesla divided its stock price by 3 and multiplied the shares of each shareholder by 3. Following the market's opening on August 25, Tesla stock dropped from over $900 per share to roughly $300 per share. The amount of shares will not change, but stock splits can be a useful tool for making a purchase seem more affordable. As a result, retail investors are curious about when Tesla plans to split its shares. Some people are curious as to whether Tesla follows any particular formula when it comes to dividing its stock. Some claim that studying Tesla's stock split history is necessary to forecast the next stock split. When the EV company split its shares for the first time in August 2020, the stock price was approximately $1,500 per share. When it split again in August 2022, the stock price was approximately $900 to $1,000 per share. It's important to remember that Tesla doesn't split its shares merely to ensure that the price increases. Rather, they do it because they know the price will rise and to ensure that their employees can purchase shares at a lower cost following the split. Although it is still a significant amount of money, purchasing Tesla stock in August is much easier than it was prior to the split, when the company's stock price was in the $800 to $900 range. Retail investors can now own a share of the top electric vehicle company much more easily, as the price of $300 per share is much more affordable. Currently, observing the pattern of Tesla's stock splits, the company is gradually lowering its stock price. Retail investors should anticipate further stock splits in the near future, so this seems like good news. Based on the company's past stock split records, it appears that Tesla is making every effort to split its shares before they hit the 4 digits in the $1,000 level. This is the foundation upon which our prognosis will be built. Some estimates for the value of Tesla stock indicate that it will trade for between $860 and $1,176 in 2024 and 2025. Having said that, it is anticipated that Tesla would split its shares at some point between 2024 and 2025. In late 2024 or early 2025, Tesla might conduct its third stock split, which would occur when the price per share approaches $1,000. If the price of a Tesla stock in 2020 is $860, how much will it be? 24. The business might split its equity 4 to 1. We draw this conclusion because Tesla appears to desire to maintain its price in the low hundreds, which is between $150 and $200 per share, and is unlikely to slip below $100. Thus, the stock price of Tesla will be 215.80 if there is a 4-to-1 stock split in 2024, at which point the stock will be valued $860. The stock price in 2025 will be $283 if it occurs. 2026, 239, 2027, 401, 2028, 450, 2029, 456, and 2030, above 500. That is, assuming Tesla splits its shares 4-to-1 once more. In 2030, when the stock price surpasses $500 per share, Tesla is likely to implement another stock split if that occurs. Like the last split, this one might be a 3-for-1 split. However, there are two possible ways that Tesla can split its shares. One way is a 3-for-1 split, and the other way is a larger split, possibly 4-for-1 or more. On the assumption that the company's stock is approximately 523, the stock price will be approximately $170 if they split the shares 3-to-1. Although it does not appear that Tesla will offer more than 3-for-1 at the 500 range, we might as well include this forecast as it is one. Having stated that, there will be a minimum of 2 stock splits in the cautious scenario. They might point out that it is a little more cautious because robotaxis, auto energy, and Tesla insurance need to be taken into account. Based on computations, the average price per automobile sold in 2022 was $57,000. This amount is expected to increase to $55,000 in 2023 and 2024, and then to $50,000 by 2025. To find out the precise performance of Tesla stock, visit Moomoo. According to the link in the bio, if Tesla's stock splits between 2023 and 2024 at $608 and $941 per share, there may be an AI for one stock split in 2024 at $941 per share, which would be approximately $188 per share after a 5-for-1 split. 2025 will see a price of $268 for Tesla stock, $402 in 2026, $544 in 2027, and $720 in 2028. Now, there might be another split to lower the price to $144,000 in 2028 when the stock hits $720. Nevertheless, these forecasts result from examining the conservative scenario, in which we focus solely on the cars and a little amount of FSD in this instance, in addition to robo-taxi insurance and Tesla energy. Furthermore, the profit and sales figures that were provided were extremely cautious. Despite all of that, there might be at least 2 stock splits this decade as numerous automakers work to provide reasonably priced, readily marketed, mass-produced vehicles. Tesla took a different approach, emphasizing the creation of opulent vehicles that would elevate electricity. In an article published by The Business in 2013, Elon Musk discussed the aim of Tesla, saying that the company's objective was the same 10 years ago as it is now, to hasten the adoption of sustainable transportation by bringing attractive mass-market electric vehicles to market as quickly as feasible. From there, Tesla maintained its lead in the auto industry by fortifying its business strategy and emphasizing a tripartite approach to servicing, charging, and selling electric cars, whilst other automakers distributed their products via franchise dealerships. Over time, Tesla made the decision to sell its cars directly to consumers, eliminating the need for an intermediary. With more than 400 brand showrooms and galleries strategically placed throughout the world, Tesla has built an outstanding network that it claims facilitates quicker product development and better customer experiences. Furthermore, in certain areas, Tesla's repair procedure is as efficient as feasible. Employees of Tesla, in addition, Tesla has addressed a major issue surrounding electric vehicles, namely how and where to charge them, by creating its own network of supercharger stations. These innovative charging stations allow Tesla drivers to charge their vehicles in approximately 30 minutes and completely free of charge. If Tesla continues on its path to success, as experts predict, Tesla stock will soar because retail investors will no longer be able to buy Tesla shares when they become too expensive. As for Tesla Rangers, these are mobile technicians who can make home calls upon request, though in some cases the service can even be delivered remotely. In order to learn about additional Tesla stock surprises, subscribe to this channel.